Hello everybody. In this video we are going to discuss about Ind AS 40, that is investment properties. What is mean by investment property, how we can recognize, how we can measure, how can we account the investment property. Now firstly, investment property means what? Investment property means what? Investment property means simply the if we have any land and building or any property, we are held some property. So investment property means we have one properties. The properties may include the land or building or both land and buildings. Now for these buildings or for this land, we have L for reason for the we having will be the L for rent, for the purpose of rent to others, that is operating lease, or for capital appreciation, or we are not able to determine means undeterminable use, then it will become the investment property. Simply the investment property definition will be: investment property means whatever the land or building or both held for rental to others or for capital appreciation or for we cannot determine if it is a PPE or investment property, then it will become the investment property. By this investment property, we need to recognize in books only when we need to recognize only the investment property has some future economic benefit. When we have future economic benefits and the cost can be measured reliably, then only we need to recognize the investment property. How we can recognize the investment property? As same as what is explained in India 16. Whatever the cost we are incurred, that cost will be included, and what is the amount, what are the amount was provided, what is the our accounting policy we are using. So same like as we need to calculate the amounts. So for that, in this investment property, example for investment property. Firstly, for example, if we have land held for long term capital appreciation, land held has currently undetermined future use, so we cannot determine what can we do for that asset, means then it will for the purpose of capital appreciation it will become the investment property. A building owned by the entity or right of use or assets relating to bill held by the entity and leased out under one or more operating lease, or a building that is vacant but is held to be released out under one or more operating leases, or property that is being constructed or developed for future use in investment property. These all are examples for investment property. In some cases, the entity owns property that is leased to and occupied by its parent or another subsidiary. Then the property does not qualify as investment property in consolidated financial statement because property is owner occupied from perspective of group. If we see in SFS, it will become investment property. In CFS, it will become the owner occupied property simply. Now how can we recognize it? Same as in the AS 16. So simply the investment property account debit to cash or bank because it is our asset, and the depreciation will be depreciation account debit to investment property. And the components, whatever the components we need to include, whatever the purchase price and whatever the direct attributable cost, we need to add that all items will be included. Each subsequent recognition, if I can at each balance sheet we need to see. In investment property will use only the cost model, but the PPE will can use cost model or revaluation model for that subsequent assets, subsequent recognition. For example, if we have property held for more than one purpose, we need to see whether we can able to split or not. If able to split, we can split it. Then what is the rental income, what is the owner occupied? Rental income is Ind AS 40, owner occupied will be for 16. If dual purpose is unable to split, then owner occupied or rental income, then it will be Ind AS 40, means we are not able to determine the use, then we use the Ind AS 40. That is, only the cost model will be allowable here. Entity investment property held as LSP, right to use shall be recognized and measured initially at cost per Ind AS. Now, for example, yes, same what we have explained, property used for both purposes. So, if some portion of property is held for business, that is owner occupied, some portion is held for rentals, then if entity is able to split, we need to split it. After that, property is given on rent. Property is given on rent or lease to subsidiary companies or by parent companies or vice versa. Then we need to see whether it is classified in the books. If lessors separate financial statement, we need to see. In separate financial statement, it will become investment property. In consolidated, it will become owner occupied property. It is the main, whatever the area. And whenever we are transferring these investment properties into from investment property to PPE or property plant PPE to investment property, transfer should be done at carrying amount. So investment property to PPE, then the transfer will be happen at whatever the carrying amount. For example, we are commenced the business, so then commence owner occupation from investment property. Whatever the ASS is applicable, owner occupation from investment property. End of owner occupation of investment property to cases we need to check out. So here transfer will be happen from transfer to or from investment property shall be made when and only when there is change in use is evidenced by commencement of owner occupation. For transfer from investment property to owner occupied investment property, India is 40 to 16. Commencement of development with a view to sell for transfer from investment. So we are commencement owner occupation and that was transferred to cases. So we have one asset we are now using for our owner occupation, then the investment property became the owner occupied. When we are we are developing with a view to sell, so we have investment property. That investment property we are developing for the purpose of sale, it will become in days 2. If end of owner's occupation for transfer from owner occupied, so owner was agreement for 1 year. After 1 year it will be investment property, means given rent to other person. So owner occupied occupation was end, then in the year 16 to 14. Commencement of an operating lease to another party for transfer from inventory to inventory. So we are commencement of operating lease, so we have inventory. That inventory is not going out from the business, means not happening the sale, we are given it to lease, that is in the years to 40. If it is not changing accounting policy, it is not changing accounting policy here. The or prior period error, it is not a prior period error, or it only due to change in use of property. Here we are use of property was changing use of property should be actual, so mere management intentions will not be considered. Change in use of method will not be considered. Next, wow, we are no, this was impairment. Here the asset was became the investment property. Whenever investment property was happened, disposal of investment, and this investment property, whenever we are disposing, an investment property should be derecognized. So gain or loss net disposal proceeds minus carrying amount of assets. So on the date of disposal or sale entering into finance lease, or when investment property permanently withdrawn from the user, or there is no future economic benefit, then the amount will be recognized in profit and loss account. This will be the main. So for disclosure measures of Ind AS 40, we need to refer the study material. Now, what we need to disclose? What we need to disclosure? What Ind AS 40 disclosure will be required? So, firstly, for that, we need to disclose fair value. We need to disclose fair value. So here the fair value required to disclose fair value of investment property. Fair value of investment property we need to disclose. Now for that investment properties, if investment property is under construction is happen, then we need to determine the fair value when it is reliably measured or construction is completed, whichever is earlier will be considered here. Whichever is earlier will be considered. The earlier will be whenever reliably measured or we have construction was completed, whichever is earlier for the under construction investment property, the fair value will be disclosed, or otherwise we need to disclose facts and reasons of thereof. So if the entity is not able to determine the fair value, then if that property is under construction, we need to earlier of reliably measured or construction is completed, whichever is earlier we need to determine. Or if we are not able to determine, then we need to disclose that fact and reason for non-disclosure. Also disclosure of valuation techniques. So whatever the valuation techniques we are using and key inputs what we are using, valuation technique we need to mention this name, and what is the key inputs we are used, what is the range we are used, this all will be disclosed. And like gross carrying amount, accumulated depreciation, net carrying amount. So we need to measure the measurement disclosure. So firstly fair value disclosure, after that valuation techniques, after that measurement disclosure. So measurement disclosure means what is the gross carrying amount, accumulated depreciation and net carrying amount, and what is the for gas carrying amount, what is the opening balance, what is the addition, what is the closing. For accumulated depreciation, what is the opening, what is the during, what is the closing, and net carrying amount, what is the closing balance. Next, disclosure relating to amount recognized in profit and loss for investment property. So investment property, what is the amounts we are recognizing in profit and loss account. For example, rental income for investment property, and from that we need to deduct the amount, like if you have any direct operating expenses was there to generate that rental income, and what is the profit before depreciation from investment property, and from that we need to deduct the depreciation amount, and then we will get the profit from investment property. We need to disclose this for investment property. Now the Ind AS was completed. Now we will see the summary of investment property. So simply we have started with investment property definition. Investment property means what? Simply the land and building, that is property held for rental to others or capital appreciation, or some cases we undetermined portion also will be considered as investment property. So here the investment property is recognized in books only when it has book probable future economic benefit is there and cost can be measured reliably. Now whatever the investment property, for the initial recognition we need to use the cost model, and subsequent recognition also we need to use the cost model itself. And in some cases property held for more than one purpose, then if some portion of property is held for business for owner occupied, if some portion is property held for rentals, then we need to, if entity is able to split, if there is separable legal title of each portion is there and they can be sold separately, then what is the owner occupied, then it will applicable in AS 16. If it is investment property portion, applicable 40. Otherwise if owner occupied portion is significant, if there is any significant, then treat complete property as a owner occupied property, then apply Ind AS 16. Otherwise if owner occupied portion is insignificant, then treat complete property is investment property as Ind AS 40. If significance is related to management judgment here, if they are not able to identify 12 portion, unable to split, then we can use this as a investment property. Or property was given and these are rental to subsidiary companies by its parent company or vice versa, then it will be classified whatever the amounts we are there, the classified in separate financial statement it will be investment property, in consolidated financial statement it will be owner occupied property. Whenever we are transferring investment property to other asset to India, other asset to investment property, commencement of owner occupation from investment property. So India is 40 to 16, owner occupation was ended, then it will become 16 to 40. Commencement of development and sale of in ordinary course of business from investment property. So investment property going to sell, then in 40 to 20. Inception of operating lease and building held for sale, India is to 40. So if it is not change in accounting policy whatever we are carrying or prior period errors, it is only due to change in use of property. Here change in use should be actual, only if their management has some intention to change the use, it is not considered as change in use. And after that the amount whatever we are disclosing, the difference amount will be charged to profit and loss account. And disclosure, so disclosure requirement is main important for investment property. Here disclosure regarding investment property notes to financial statement. Firstly, fair value we need to disclose. For the investment property, always measured recognition method will be cost model, fair value will be disclosure. And if fair value he is not able to determine, then if investment property is under construction, we need to determine the fair value when it is reliably measured or construction is completed. Or if we are not unable to get the fair value, then we need to disclose the whatever the fact and the revisions of that assets. And after that we need to disclose the valuations techniques, key techniques, valuation techniques and key inputs what used in the valuation and range of units we are used. After that we need to disclose the carrying amount, what is the gross carrying amount, what is the accumulated depreciation, what is the gross carrying, what is the additional depreciation, what is the net carrying amount. After that disclosure will be what is the profit, rental income from investment property. From that we need to deduct the direct operating expenses, and after that we need to decrease the depreciation, we need to get the profit from investment property. This is investment properties. India is 40.